everyone, and today we are going to talk about two companies that seem to have a good potential ahead based on their recent filings. So the first one is a rail tech manufacturer which has unveiled India's first 100% indigenous zero-emission propulsion system, and the second one is a healthcare product maker that's gearing up for its strongest year ever. Together, these moves highlight how innovation in rail technology and rising healthcare demand are shaping the next wave of growth. So welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always come in the spotlight but have a strong potential for future. I am Saizal Agarwal, Equity Research Analyst at Desvelado Advisory, and today we'll be discussing about two companies that are making solid progress in their business. But before that, here is a quick disclaimer. So, any discussion, facts, or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So, please conduct your own due diligence before making any investment decision. Now, let's move to the first company, which is Concord Control System Limited, and it is in a business of electrical machinery for Indian Railways and allied products. Now, the company has just announced a big breakthrough, India's first 100% indigenous zero-emission propulsion system for converting diesel locomotives. Now, this system runs on lithium iron phosphate batteries and a DC chopper-based drive, helping to eliminate fuel consumption during idling, reduce the emissions, and improve the efficiency. Also, it's a game changer for safety and sustainability and also aligns perfectly with India's railway target of 100% electrification by 2030. With a strong order book of 212.5 crores, a 40 to 50 CAGR growth target over the next 3 to 5 years, and a total addressable market of nearly 47,050 crores until FY30, Concord is clearly positioning itself for the next leap in the rail ecosystem. And now to dig deeper into how the company is performing, let's bring in Nishant. So Nishant, can you tell us how has Concord done financially in FY25?
Thanks, Hazel. Financially, Concord has delivered a stellar FY25 performance. Revenues almost doubled to rupees 124.4 crore from rupees 65.5 crore in FY24. That's an 89.9% growth. Both halves of the year showed strong traction with 42% growth in H1 and 50.3% growth in H2, reflecting the company's expanding order execution and demand momentum. Profitability also grew, though margins fluctuated. EBITDA rose to rupees 29.6 crore from rupees 17.1 crore, but margins fell slightly to 23.8% from 26.2% due to higher input costs and scaling related expenses. Talking about the net profit jumped to rupees 22.6 crore from rupees 12.8 crore, but margins moderated to 17.7% versus 19.2% last year. So overall, strong growth and profitability, though the near term focus will be on sustaining margins while scaling. My question to you, Saizal, is what is Concord broader growth strategy going forward?
Great question, Nishant. I think Concord is preparing for its next leg of growth by aiming to become a 360-degree rail solution provider, not just in India, but globally. And one of the major areas is developing products for hydrogen and battery-powered locomotives, which opens new market beyond India and ensures long-term sustainability. Also, the company is clearly thinking beyond today and positioning itself for the future of rail technology. Another major growth lever is its Kavach 4.0 train protection system, which is currently under RDSO evaluation, and this represents 40,000 crores market opportunity. Now, with upcoming field trials and tenders, Concord low-cost in-house development could give it a significant competitive advantage as well and lead to meaningful order inflows. So the roadmap is clear: expand the product offering, tap the global market, and ride India's electrification wave. But Nishant, given these ambitious plans, how well placed do you think Concord is in the larger rail ecosystem?
I think that's a very important point. I would say Concord is extremely well positioned. Firstly, the zero emission propulsion system directly support the Indian Railways sustainability goals and establishes Concord as a first mover in next gen propulsion technology. Secondly, the order book of rupees 212.5 crore provides strong near term revenue visibility, while the rupees 47,050 crore total addressable market ensures a huge runway for growth until FY30. And with 40 to 50% CAGR revenue growth guidance, Concord is signaling confidence in its scaling capabilities. Finally, the upcoming Kavach 4.0 opportunity is the real kicker. If Concord captures even a fraction of that market, it could transform the company's scale entirely. So, if I have to sum up, Concord is no longer just a small railway component manufacturer. It's shaping up to be a high growth niche rail tech player with strong financials, path breaking innovation, and a clear long term roadmap.
Well said, Nishant. Concord's combination of innovation, growth momentum, and future ready projects makes it one of the more exciting players in the India's evolving rail ecosystem. And I think if it executes well, it can establish itself not just as a supplier but as a global pioneer in sustainable rail solutions. And now let's move to the second company, which is Cupid Limited, which is India's premier manufacturer of male and female healthcare products, personal lubricants, and IVD kits. Now, the company has reported its largest ever export order of $11.5 million, which is around rupees 100 crores, and to be executed in Q2 and Q3-FY26. And these orders are coming from South Africa, Tanzania, Kenya, WHO, UNFPA, and NGOs like MSI and PSI. On top of that, traction is building in IVT kits with European orders expected from Q4 FY26 after CE certification. And the company has also secured L1 position in Brazil's female healthcare products tender, which is around 40 crores, and will start supplies under the 5-year South Africa tender from Q4 FY26, ensuring long-term revenue visibility. All this has been made possible due to unique WHO UNFPA certifications, capacity investment, and diversification into diagnostics and FMCG. Now, the management even history with exports surging and FMCG expected to cross around 100 crores, plus GST rate cuts from 18% to 5% on personal care and 12% to 5% on IVT kits will also reduce cost and boost the affordability. So, Nishant, can you walk us through how Cupid has performed financially in FY25?
Yeah, absolutely. Saisal, financially, Cupid delivered a steady performance in FY25, though with some mixed signals. Revenue stood at rupees 183.5 crore, up 7.3% year on year from rupees 171 crore in FY24, supported by healthy sequential growth. In Q1 FY26, revenues hit rupees 59.8 crore, up 6% year on year and 52.9% year on year, showing strong demand momentum. On profitability, it was a bit more challenging. EBITDA fell 16.6% year on year to rupees 41.7 crore, with margins compressing to 20.5% versus 28.1% last year, mainly due to higher operating expenses and lower other income. However, net profit remained stable at rupees 40.8 crore versus rupees 39.8 crore in FY24, with margins still a healthy 22.2%. And in Q1 FY26, our net profit surged to rupees 15 crore, with margins improving to 25.1%, slightly early signs of recovery. So overall, I think Cupid remains a highly profitable niche player with double-digit net margins. But the key challenge will be sustaining EBITDA margins and rising costs. Now, my question to you, Saisal, is with such ambitious growth plans, what is Cupid doing to strengthen its capacity and operations?
That's a great question, Nishant. I think Cupid is making strategic capacity in expansions to back its growth trajectory. The company is setting up a new Palava manufacturing facility, which will increase the healthcare products capacity by 1.5 times and also add in-house protein synthesis for IVD kits. And this is critical because larger scale will not only allow Cupid to fulfill big export tenders without stretching the resources, but also bring in operating leverage, lowering the per unit cost and boosting the margins as well. And also, this expansion will strengthen Cupid's ability to execute its order book to a record level while improving profitability over the medium term. But Nishan, beyond manufacturing scale, how is Cupid building its presence in the FMCG market? Please show some light on that.
Yeah, I think it's a great point to discuss. FMCG is turning into a strong growth engine for Cupid. The company has already achieved 1.2 lakh retail touchpoints within 15 months. I think that's great, and its company is also targeting 1.7 lakh outlets by FY26. The recent GST rate cuts make products like lubricant, fish washes, and oils more affordable, which should accelerate volume growth in the space. What's exciting is that FMCG revenues are expected to cross rupees 100 crore, providing recurring cash-rich inflows. This reduces Cupid reliance on export tenders, which can be lumpy, and instead ensures stable top-line growth. So while exports remain a core driver, FMCG and diagnostic together are giving Cupid a diversified and resilient growth model.
Well put, Nishant. I think also Cupid is clearly at an inflection point with record export, FMCG expansion, GST driven tailwinds, and upcoming diagnostic opportunities as well. And if all of this executes well according to the plan, FY26 could indeed be its strongest year ever, cementing its position as a profitable and globally recognized healthcare and FMCG player. So thanks a lot, Nishant, for giving us all that information. It really helped us to understand the direction both these companies are moving in. And now let's take a quick look at how some of our previous picks have performed. VST Tillers Tractors Limited, it rose from 4,575.2 to 5,381 with a gain of 17.6%. Deep Industries Limited, it increased from rupees 500 to rupees 552.9 with a gain of 10.6%. Next is Ceinsys Tech Limited, it declined from 1,843 to 1,810, showing a fall of 1.8%. Next is Acutaas Chemicals Limited. It jumped from 1,177.3 to 1,435, which makes a gain of 21.8%. And lastly, we have Tilaknagar Industries Limited, which slipped from 480.8 to 461.6, showing a decline of 3.9%. So overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape up in the coming quarters. And here is the QR through which you can access all these previous picks which we covered recently. And now let's move to the summary of companies which we covered in today's Noisemaker. Concord Control System Limited, which has announced a major breakthrough with the development of India's first 100% indigenous zero-emission propulsion system for diesel locomotive conversion. And next is Cupid Limited, which has reported its largest ever export order of $11.5 billion, which makes around 100 plus crores, to be executed in Q2 and Q3-FY26, driven by orders from South Africa, Tanzania, Kenya. So that's it for today's edition of Noisemaker, and if you found this breakdown informative, you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead, and stay informed.